Hello. Really pray my people are having an amazing, blessed Tuesday morning. It's currently just about to hit 10 p.m. here in South Africa. And we are looking at NAS NQ today. And we are potentially, obviously, looking for a sell setup. We will dive into lower time frames. I will focus today on trade management, execution, and trying to find a setup. My goal for this year is to only use 6 reference points, external range liquidities. This is higher time frame reference points because my friend did ask me trade management, so I do think what I'm going to do in these lower time frames is not technically trade management because I'm only looking for a 20 handle execution. But my goal today is to do that, and I'm looking at external range liquidities on these daily charts. When you transform them into an hour, this is how they look. So you can, I won't say they're null and void, these levels, but I am looking for shorts above this level, and my shorts become null and void if we get a body close above here. And when we get a body close above here, I would look for that to invert, and my long setup should be when we trade back to that level, and my stop would be here. In terms of range, I would look like if we close body below this. And I know it's a huge range when you're looking at it, but when you're on these lower time frames, you can't really flame risk with efficiency because I can find a 50 handle stop loss. I can find a 45 handle stop loss while I'm targeting almost 450, you see. So that's kind of how I'm looking at it. But I won't be swing trading this year, not in any shape or form. I'll only be looking for 20 handles executions. If you do find any execution that's more than 20 handles, please unfollow me, block me, and I shouldn't even be talking to you because I'll be disrespecting you. My goal this year is to show conceptual understanding, contentment, which is best, and how to win in execution using velocity and not necessarily holding longer. Just because you hold the trade longer doesn't mean you're a better trader. Anyways, so first things first, sell side liquidity will be marked. It is my first reference. Or let's wait for the hour to print, and then I'll use those reference points as my reference points. Apologies. I am a bit early. I am 4 minutes early, and obviously I'm excited, man. I haven't seen the financial market in over 3 months, and I haven't executed with the level of efficiency I usually do. I might be a bit rusty, so please forgive me. I might give myself leeway today and execute 3 trades just to show trade management, to show conceptual understanding, and to also show velocity. I might actually let me do 5. I might do 5 and get a 100 handles, only using a 20 handle model. Just for the day, just to start off the trading year, and we'll kind of take it from there. Other than that, I really hope this year is filled with nothing but positivity, nothing but love, understanding, patience, and just know that your time is coming. Be patient, don't rush it. Speed kills, and I'll try my level best this year to show you where potential setups can form, and how to utilize external range liquidities and internal range liquidities. I'll only be using 2 reference points. One is the 1 hour chart for external range liquidities, and I'll only be executing on a 1 minute chart once those external range liquidities are going to get traded into or have been traded into, and we look into turtle soup. And I'll also be looking for inefficiencies within the 2 extremes of the range I'm looking to study at that predetermined moment in time, which is usually the last 3 hours of the candlestick. I'm looking to study, and I'll show you how that looks like conceptually, because I will be doing it every day this year. Might not be every day depending on my schedule and my meetings, but I'll try my level best to make it an everyday thing. And I'll show you how we can potentially use time to find and execute with level of efficiency that are underrated. I'll try my best this year to focus on one model and one model only, which is the swing high and a swing low. That's the conceptual idea that I'll be. It's not necessarily a model, but it's a recurring pattern that occurs over and over again within the financial market, and you can time these because these are reference points for executing. They're reference points for data. They're reference points for conceptual understanding, and yeah, they're very specific price models. Very specific price models. There are potential swing points, turning swing points, where you can anticipate liquidity being engineered after liquidity was taken, and the pattern is generic. It happens on all time frames, but personally I want to show you how it works on the 1 minute. I don't care about the 5 minute, the 3 minute, the 2 minute, the 30. I might dive into a 5 second this year again, but later into the year. I did that last year. I was so proud of myself, but I'll do that maybe later into the year, June, heading into July, when I'm more fine-tuned. I'm more comfortable with the 1 minute than any. And our trading model is about to begin our trading session our session is about to begin in the next 50 seconds. So I really pray we find courage to be patient with ourselves, to execute with the utmost of efficiency, and to not have fear, man. We're here to make money this year, and it's going to be an amazing trading year. For those who have failed dismally last year, this is your year to try again. If you have any thoughts of giving up, then this is not for you. If you feel like giving up, don't do this. This is it's not a game here. We don't give up. And if that thought crosses your mind, it's best for you to stay away from it. Wow. Sorry, my brain is already wanting to execute, like it's already wanting to analyze. I'm like 15 seconds left, what the fuck am I talking about? But yeah, if you feel like giving up, then you best should, because that thought should not cross your mind if you're a real executor, if you're a real trader, and if you're here to do it for the long haul. But anyways, because there is no quitting here, man. There is no quitting. So here we have it. We have the previous hour, so we'll only use 3 reference points. The first reference point is the previous low, 1. Second reference point, 2. And I might throw in the I told you the 11 o'clock. I'll always try to throw that in, just for it's Asia, so I try my best to also throw that in. But anyways, then we have the high right there. We have the high right here. And we have a high right there. So from this, so these are 6 reference points, external range liquidities. These are 6 external range liquidity reference points. So what I usually do is when I'm viewing price from this perspective, what I usually do is I watch what is the extreme range high and the extreme range low. Personally, I would love to add the swing high right there. Let me do it. So it will be 8 reference points just for today. Apologies, because I'm very much interested in Asia's high, or not Asia's high, but that swing high post Asian session. So now that we have it, what I do is I'll remove all the things that are in the middle. Apologies, and I'll tell you why now. So these are the range liquidities inside this range, but this is the extreme liquidity high, and this is the extreme liquidity low. And I watch that range. How many handles is that? Oof, 233. Beautiful. Was this 233 also? Apology. Oh, 214. But anyways, so now within this, what I'll do is, since we have the high and we have the low. Oh, by the way, we are looking for shorts here. We have the low here and there. I'll mark this in red. So this is the extreme range. Within this, what I'll do is I'll look for fair value only within this high and this low, and I'll look within the previous day. What do we have? We have it here. 1 right there. This is buy side. Where else do we have it? We have 2 sell side right there. Interesting. So now what I'm looking for is I'm looking for sell. So we're within this range from high to low, and I'm looking for it to tag sell side. But on lower time frames, I want to see how is this sell side liquidity engineered relative to that buy side liquidity. Then and only then will we find our short setup. So anyways, turn this to red, and we can remove all these, and then we have the range extreme high. We'll have all these transposed to our lower time frames. There, there, and low, there. We have a low there, and we have a low there. So these 1, 2, 3, 1, and oh, this buy side is, apologies. Mark it in below. So we have these 6 reference points, and we're going to dive onto lower time frames to see how these reference points were engineered. So on a 1 minute chart, first things first, my brain is already wanting to short for 20 handles. Apologies. So first things first, when we're on these lower time frames, look at how crisp everything looks. This low was engineered within that fair value on a higher time frame. Oof, this becomes target. What is that? It's a double bottom. I love those for liquidity. This becomes my target automatically because I've seen it 1,000 times. So here we have buy side liquidity engineered within the previous hour. Here we have sell side liquidity engineered within the previous hour. which is a consolidation. It's a consolidation followed by what? An expansion. After the expansion, we get a potential, apologies, someone is giving me a call, what the hell? So now that we're looking at it from this perspective, 3 a.m. opens and trades lower. Engineers a buy side liquidity, engineers buy side. So for now, the narrative is we're going to go lower. The bias, sorry, is we're going to go lower. But what's the narrative? Meaning, how are we going to go lower? So below sell side liquidity, between this sell side and this side, what fair values do you see here? The one that really jumps at me is this big one here. So I'll mark that one from high all the way down to that low. So now, if we are to see higher prices, this would mean, because we're going to try and get 100 handles today, where if we trade to 50%, which is below the swing, oh, this is fair value right there. Ooh, interesting. So below the sell side liquidity, this is the fair value that jumps at me. And if I'm looking to execute using this huge fair value on a 1-minute chart, after clearing external range liquidity, my model becomes I'm looking to go long right when we sweep this sell side. Actually, when we trade into that, honestly, that's what I think we're going to do. And I'm going to go long. Oh, let me do this. Buy there. There we go. So we have a buy limit right there. So notice we're not using time just of yet, because I'm looking for it to, when it trades below this, I'm looking for it to do it at a 3-minute interval. Our stop loss will remain a constant navigation move. Thank you. Our stop loss will remain a 81 handle stop. Our TP will be an 81 handle TP. And we're looking to see if can we trade at 50. There we go. Edit. Then change the TP. So 81 is just for the spread. There we go. So now what we're doing is we're reading the narrative. So since it's the 3 to 4 o'clock hour, we're looking for it to chase liquidity. It opens and trades lower for a potential power of 3. We've traded on a higher time frame, 50% of that higher time frame inefficiency. We've traded into 50% of this higher time frame inefficiency. But this, when we traded into this, we swept sell side first and then traded higher. Here, we've buy side, sell side. This could be a sign of weakness, honestly, when I look at it, because the O clock just opened and traded lower. But in reality, I don't think that's the case. I think we are going to trade above the midnight open before we see any lower prices for the remainder of this trading session. So we are getting closer and closer to our potential execution. Please note this is a lot of levels on my chart, and I never have these many levels, because I already know the reference points and I know the times that I'm looking to execute, whether it's short or long, relative to these reference points that we are currently studying. So we'll look at it from this setup perspective. And we'll be targeting here. Just for short term. This is external range. So this is we're watching it from this perspective. This is a dealing range from this high to that low. When we trade below 50%, and we touched it there, that's a beautiful long. But now I want to see it trade into what? Fair value. If we do dig lower here, we'll try again and execute long. And I really wanted to short it going there, but it's okay. So the generic pattern I want us to study this year is the swing highs and swing lows. So I will only be executing on 20 reference points. That is the O clock, the 3 minutes after O clock, 6 minutes, 9 minutes, etc., all the way up to 60, which is the minute close. And I'll only be executing on those 20 reference points. So now, like for example, this is 0309. This is a time I'll be going long or short, and I'm anticipating a swing high or a swing low, but not now, like as in now. But now let me show you how that would look like. So, for example, this is a 3-minute interval. So when this candlestick closes, the next one, as when let's wait for it to close, because I would have preferred it to be this, but it's okay. So I'll show you what I mean by something that's generic within price action. And it's not guaranteed it's going to happen on this minute interval, but it's something we're going to be studying for the whole year. And then I'll show you how to pinpoint when it will work and when it won't. So for example, this is a 3-minute interval. If this was a swing low, meaning it was a potential generic price action model that engineers a swing low, that low would not be taken, meaning the candlestick would open, trade, and then continue to spool higher. But we want to see this. Why? Because we want to go long. There we go. We triggered in long. I would have loved it to be a 3-minute interval, but it's not. So now we are digging into fair value here, which is this baby, from here all the way up to there. And when the candlestick closes, we should not trade below that candlestick low. If we do, then we are well on our way to that sell side liquidity, which is what we're initially looking for. And we will get efficiently removed, and then this will be a potential inversion. So it doesn't seem like we'll take out those highs. Personally, I do think we will, but we'll see. So trade management is as follows. As soon as this candlestick closes, right there after entry, we should not trade below this low. If we do trade this low, I will get efficiently removed. That's a guarantee. So if that's the case where we have a predetermined level in which you don't want price to get to in any shape or form, because if it does that, that's a sign of weakness, or that's a sign of you're wrong or you're offside. What I usually do is I'll move my stop loss right there, like so, just there, just a tick lower, apologies, 25. Why am I doing that? Because I don't want it to trade below this low. It's not that I'm fearful, I'm anxious, or in any shape or form. If it does that, I'm potentially wrong. And what I do is I'll wait for price to go above my initial point of entry. And once it gets to 40, which is half of where I'm looking for a target to be met, depending on the price model that's currently printing, I will move my stop loss to break even. It's not always guaranteed I do that, but those are the conceptual ideas I follow and look for when I'm executing with the utmost of efficiency. So basically what we're saying here is we're saying the low for this hour is already printed and we got in at the low of that hour. It's not guaranteed it happened, and I don't like the fact that we got this body close below that 50%, which shows that we might even dig deeper into that low, which is what I don't want to see, honestly. And if we do, it's okay, then I'm wrong. And it shows that I'm a bit rusty. I haven't been on the financial market for the past 3 months now, so I'm not as perfect as I would love to be. So we'll just have to kind of wait it out. But we have swept sell side liquidity, and we're not looking for it to trade into the previous hour's sell side. We're looking for it to chase the buy side liquidity instead, because the narrative is we are looking to target lower prices and obviously that low there. But before we do that, we want to see trade above midnight. Because if it trades above midnight, that's signs that we're going to see higher prices. Apologies. It's signs we're going to see lower prices heading into the AM session and the PM session. But if we do it in London, that'll be perfect. So we're consolidating here, and after the consolidation comes in a potential expansion. And personally, obviously, we don't want it to expand lower. We want it to expand higher. What time are we waiting for? We're waiting for 03:15 to begin the spooling process. So now we're patiently waiting for 0315 to really begin spooling in one direction, preferably higher, back into what? This range. This high to that low. I have so much on my chart, it's ridiculous. But this is what my brain is seeing. We're outside that range now. We've met my PD array, which is the one I was studying, and we've traded below 50% of that PD array, and we've found fair value. Now we're looking to see if it wants to really snap back into this range, because if it does that, then we're going to look for another long targeting all these relative equal highs. And just because I'm long on these is high frequency algorithmic trading, where on these lower time frames you're looking to see how these 1 minute chart relate to these higher time frame external range liquidities, because on an hourly this is just literally just ticking up and down, but on these lower time frames we get to see the intricate details of why and how it is doing that. That's the most important part. So here we are at 0315. Would love to see if it will really expand back into this range, so just that low. So I'm looking to see if it wants to do that. The more energy it does that, the more willingness it is to reach my TP. And honestly, I don't like the drawdown. 61 tick-off drawdown is ridiculous. But it's because there we go, as you can see, perfection. Right on time, right on price. That's what we're going to do this year. We're going to be right on time, right on price. I apologize because I do have a lot on my chart. I swear to Jesus, I don't trade like this. I would usually, this is just put for reference points. This is put for external. So if we're to reject this, that means we're going to go low, and I'm wrong. It's okay. I'll take my L and walk away. But literally, I would have these. This is internal range. This is external on an hourly, but it's also internal relative to all these small internal range liquidities. But what's important is, can you identify where setups would form? Can you read the narrative? Meaning, can you read the room when you enter? And this is the things I want to show. How these because when you have buy-side liquidity on an hourly chart, it's just buy-side. But when you watch how it's engineered, you become more confident. You become more calm. You become more aware. I'll probably just remove this because I don't need it. You're more calm. You're more aware. You're more fine-tuned and here it's a swing high. So this is what the generic thing in price action will be studying. This is 0315. What did it do? It engineered a swing high. The next one opens and doesn't trade above that high. So now we're looking to see, does 18 engineer a potential swing low, generic in price action, for the 19 to begin spooling higher. And if it doesn't do that, it's okay. We wait for the 21, etc., etc. The more you study this, is the more you'll find that there are times in which these patterns make sense. Like, for example, this would be a beautiful short if I was looking for a short setup to here, or even to that south side liquidity. Why? Because it's a 3-minute interval. But since the narrative, what we're trying to read does not allow that, we don't want to see such things. We don't want to see it engineer swing high. We want to see this candlestick break above it. That shows more signs of strength. So we're going to look at 18 now, which is the minute after this, which might not happen. We might see 18 spool higher and dig more into that range. So basically, every 3-minute interval, what I'm looking for it to do is to show willingness to see higher prices. If it does not do that, I'm wrong. If it shows more willingness for lower prices, I'm wrong. So now what do we have here? We have 18 traded below the 17 low, and we don't want the next candlestick to open and trade below this. So this is what trade management is. If I don't want to see that, if I don't want to see the next candlestick open, what do? I'll take my stop loss and I'll put it right below that low. If it takes it out, then most probably I'm wrong, and it needs to be 25 ticks. Okay, just a tick below that. And the next candlestick should open and not trade below that low. If it does, most probably I'm wrong. But this is trade man, and it's difficult if you don't know what you're looking for. If you don't know time, if you don't know conceptual ideas, it's almost impossible for you to really fine tune and find yourself and really execute with the utmost of efficiency, with no fear, with no, you're not afraid, you're not anxious, you are not fearful, you're not going to make a mistake. You're literally doing what you've done over and over and over again for years. And those replicate in your understanding of what price is. And it becomes very easy for you to get these tick lows and tick highs because you have conditioned your mind to know that these things are generic and will happen and can happen if you're on the right side. And we're watching it play out in lifetime. And it's really beautiful. I really hope you find the strength to trust your models like how I trust mine. I really hope you find and watch for 20. I really want 20 to start spooling higher and trade back into that range. Personally, I think 21 will do it. Even if 20 doesn't, it's okay. But I think 21 will do it. But and I also think my TP might be hit at 22, 23. If not 21, I genuinely wanted to hit at 21, but it's okay if it doesn't. And what we're doing is you're not afraid of your trade setup not playing. You're not afraid of you being wrong. You're not afraid of you being right. That's not what you're in it for. Can you execute with efficiency? Do you understand where it's going to go? How is it going to do it? And are you using time as reference? Because if you're never using time, it becomes difficult for you to move your stop loss with the utmost of efficiency. It becomes difficult for you to manage your trade because what are you managing it relative to? Are you managing it relative to your handles and pips? Like for example, here we've already delivered 40 ticks. Then your method of approach will be at 40 ticks, I move my stop loss to break even. And even if it turns back and stops me out, that's okay. And that's the model and conceptual understanding you would use. Like, because when I started, it was a 1:1. And we keep him beautiful, that expansion, as expected, on time. Sadly, my meeting is about to start in literally 2 minutes. And I won't be able to do the 100 handles I really wanted to do. So I have to kind of leave you guys here. So, and it's okay. I really wanted to spend more time. Because now I'm getting calls. It's crazy. So notice that 21 is not really making an attempt to dig in deeper and deeper into this range, which is what I would have loved to see. I would have loved to see it make really, like an explosive attempt to go higher. There we go, right on time. 10 seconds left, TP hit, right on time. Thank you guys so much for your time. I pray you guys have amazing, blessed remainder of your trading year. And this is my first execution. I owe it to you, my good sir. Thank you so much for spending time with me. Thank you so much for giving me your ears. And hopefully this year we can execute with the utmost of efficiency and we're not afraid. So we've traded back into 50% of that range right there. We've traded back into it. So the conceptual idea is not finished, but we could see bag these buy side. And we did tag the swing. We caught the swing low for the 3 to 4 o'clock hour. And yeah, other than that, I really pray you guys have an amazing, blessed remainder of your day. And I will see you again, same time, same place tomorrow. I will try my best to get 100 handles today. So I'll be executing. But if not, it's okay. I'll just take this and walk away.